Hello everyone and welcome into the channel. My name is Brent with Investing on the Go, and today we're going to be recapping March 12th, 2025. We're going to go ahead and talk about the indexes, why there was a little bit of a difference here between the S&P, Nasdaq, and the Dow Jones. Talk about some news for the day. If you guys are brand new here on the channel, definitely go down below, hit that subscribe button, and also give this video a big old thumbs up. Would really appreciate it. And with that said, let's go ahead and get into the video. So we're going to go ahead and analyze some of the performance of the S&P, Nasdaq, and the Dow Jones today. We can see at the midday around 11 a.m., 2 hours after opening, the market had essentially been going negative, 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 and it had been expected that the market would continue trying to lower, but the last 2 weeks have shown that most Wednesdays and Fridays, the market gets some sort of relief. So Wednesday, there's a bit of a breath. What had helped that was an article or those inflation numbers came out. So we'll go ahead and cover that here in just a second. But the S&P 500 climbed up roughly 0.49% today. The Dow Jones did do a bit of a climb as well, but just add that there was a little bit of a negative chatter with tariffs from Europe affecting some of the steel and aluminum, which we'll go ahead and take a look at as well. Which Dow Jones is not as tech heavy as the S&P and Nasdaq, so that actually ended up affecting Dow Jones just a little bit more, dragging them into the negative by 0.2%. And we had the Nasdaq, which is very tech heavy, being influenced today by the big bump in Nvidia and Tesla, both of them moving over 6% and 7%, putting Nasdaq up 1.22% on the day. Now, when taking a look individually at the heat map, this is the heat map of the S&P 500. If you guys go over to finviz.com, you can take a look here. If you click on this heat map, you'll see this map up here. I'm taking a look here at the 1 day. We can see that while the Magnificent Seven, which had been beaten down here in the short term, we did see quite a bit of recovery across all 7 of those outside of Apple. Apple is down 1.75% today, whereas all the rest of the Magnificent Seven, such as Microsoft, Nvidia, Apple, Tesla, Google, and Meta, are positive. You did see throughout the rest of the S&P 500, it was mostly red, but these 7 companies here, the magnificent ones, kind of really upheld the market and pushed it into the green, especially that bump up in Tesla of 7.59% and Nvidia by 6.42%. Those two alone really helped push that market into the green for the day. Now, I'm really see a lot of investors kind of looking and eyeing Tesla now, as it had been down nearly 50% as of Monday. So I've seen a lot of discussions chatter that a lot of investors are kind of buying into this now because they're getting a really good discount to what it had been just about 2 or so months ago, right? About 2.5 months ago now. But just kind of piling into this one. I do believe that the overall drop kind of began to cool down, but I am holding off until Thursday. I have begun to buy myself, but I'm still going to continue to hold off a bit as Wednesdays have been pretty positive. If you look back at the S&P 500 over the last month or so, this show me the option there to look at the month. Let me go ahead and pull it up, and I'll bring it over on my other screen here. We'll see that if we look at a month and we look at every Wednesday for the past 2 weeks, we'll see that Tuesday going into Wednesday has been a positive day. You can see there's a positive by 0.05%. We look at the next Wednesday right here, another positive Wednesday by 1.07%. And here, we take a look at from Tuesday into Wednesday, there's that positiveness by 0.5. It was 0.49%, but the SPY is something I track. That one is positive by a bit different. If we look at it on the day, it's by positive 0.53 versus 0.59. So a little bit better performance than the general index. But yeah, Wednesdays have been generally positive, as well as Fridays. If we take a look at these Fridays, so here there's a Friday, Thursday going into a Friday. That first Friday after the negative downturn was up 1.56. That second Friday after that negative downturn was negative 0.56 to the upright. And then I'm waiting to see what's going to happen here on Thursday. Are we going to retest this low? Are we going to fall below it? That could lead up to what's going to happen here in the short term. If we retest that low or even break below and close below, that means we're going to have much more red in the market. If we trend sideways, we might even end positive tomorrow on Thursday. Generally, I feel like Friday will be positive, and that'll help kick the market up a bit. And then if there's any sort of agreement or discussions or agreements, that's going to help even better, even more. Now, what caused the reversal today? 2 hours into the day, there was a bit of a surprise with the CPI. So the Consumer Price Index came out. That's not the article I wanted to look at. Yeah, so CPI numbers came out here, and CPI showed inflation actually cooled more than expected in February, while a lot of investors and consumers were expecting tariffs and such to cause inflation to spike a bit. That's not the case, as of February's numbers. March's numbers could be a little bit different, but that kind of eased that downwards motion here in the market and caused the market to recover a bit. But again, the US stock advanced on Wednesday as cooler than expected inflation data helped stanch that sharp sell off, but there's still that escalation. President Trump and the whole multi front tariff war against Canada, Mexico, Europe, and all sorts of that stuff. So there is a bit, a lot of people are beginning to buy. So we're seeing a bounce today on the lower than expected inflation read and some dip buying. I have begun dip buying, and I sold out of some Apple, bought into Meta. So I'm definitely using this opportunity to kind of transition some of my portfolio around from some value buys into some more growth opportunities, especially after this recent dip. It just kind of gives you that opportunity to re-evaluate your portfolio. So investors' hopefulness about inflation cooling has been mitigated by the ongoing trade war strife. And for that reason, we are really expecting uncertainty and volatility to continue here through. They're expecting uncertainty and volatility to continue here through much of March. But I'm like, as I said, I'm looking forward to Thursday, Friday to kind of see what happens. Are we going to retest those recent lows, or are we going to pop up on Thursday, kind of trend sideways and either flat? I'm looking for a flat. I want to find that bottom. So Thursday we find that bottom. Friday we might make that recovery. Doesn't need to, we don't need to come to a resolution with tariffs. That could just be like, hey, the market's already sold off quite heavy. Let's go ahead and make some sort of recovery, right? We don't have to pop back up to all-time highs again, but though I do expect some, maybe a bit of recovery, right? After the last 3% we lost on Monday and 3% we lost last week. So Trump came out imposing 25% tariffs on imported steel and aluminum. Canada promptly responded, along with Europe, ramping up retaliation tariffs, and that kind of caused some rattling within the market. So let's go back to this one. Discusses the CPI. Thought I had a better. Nope, that may have been it. Okay. So yeah, this is what kind of caused. So CPI numbers came out. That caused the market to begin recovering. But why is that? Why is there a difference between the Nasdaq and the S&P? Well, we saw that the Nasdaq had help from Tesla and Nvidia, which is very tech heavy, so that helped push them. The S&P 500 is 30% pretty tech heavy as well. But the Dow Jones over there, they're not as tech heavy. They have companies such as Harley Davidson, which are going to be affected by those tariffs. So Harley Davidson is facing a 50% tariff for motorcycles exported to Europe. So that caused them to go down by 5.7% today. So that's a big old hit. 50% tariffs for motorcycles exported. Also, Brown Forman Corp. This is another company down 5.08%. This will be one, they're going to be another one from Europe. The retaliation of tariffs causing this stock to slide here. So there's a lot more companies within the Dow Jones that are not tech focused that were affected by either tariffs from Canada, from Europe, so that caused them to go into negative by 0.2%. So overall, on the day, we saw that the S&P 500 rose nearly 0.5%, the Dow Jones lost 0.2%, the Nasdaq rose 1.2%, I didn't really track the Russell a whole lot. I guess I used to in the past. I don't so much no more. For the week, the S&P 500 is still down 3%. The Dow Jones is down 3.4, and the Nasdaq is down 3%. So across the board, roughly what 3.2% is your average there for the week. And you can see here for the year, the S&P 500 is down 4.8%. So a bit of a negative start to the year, but that's fine, right? March is generally the most negative month in the year. And then we have that nice little grace period through summertime. So I do expect the market to kind of pick up, especially if there's any, agreements for tariffs and they come to an agreement that just basically wipes the uncertainty out of the market and everything can trend back on track. The Dow Jones is down 2.8, the Nasdaq is down 8.6, and the Russell is down 9.1. Holy cow, I did not expect that one, but yeah, a big old whopping 9.1. Okay, that is going to be it for today's market recap of the S&P 500, Nasdaq, the Dow Jones. So mostly CPI numbers came out better than expected on consumer pricing index and inflation numbers for February, causing that upwards trend and positiveness in the market. And I'm really hoping that Thursday we do see like a 0% loss, 0% upside. Like I just want it flat. That means there's no more downside pressure, but people are still kind of waiting. And then Friday, I'd like to see some recovery on Friday. Okay, that's my that's my expectations on the market. Let me know down in the comments section below, what do you guys think the market will do? Do you think we will still move to the negative? It really just depends on what happens, like what comes out of people's mouths is going to cause the market to move either more up or down, right? So just let me know down in the comment section below. I would really love to hear from you guys who are out there watching the video. Just say hello, leave your responses down below, okay? That's it for me. Thank you all for tuning in. Be sure to go down below, subscribe, and give this video a thumbs up. I will see you guys in the next video. Bye-bye.